Hi everyone, so in the article below I have reviewed the solution coming out of the UK, which is Nutmeg. Now Nutmeg is one of the bigger robo advisory companies in the United Kingdom, and to summarize the article below really, Nutmeg is not a bad option. It's got plenty of investment options, the technology is good and so on. So it's actually got many positives, but the negatives are it doesn't service a niche as much as some options. In other words, it isn't focused on the expat niche or the high net wealth niche. It's very much focused on, for example, a lot of beginner investors. If you don't have a lot of money, you're relatively young, these kind of apps are great for you, but not so much if you've got many niche needs. And in addition to that as well, Wealthfront and the other big robo advisory firms in the United States have actually been struggling more recently. They had huge growth, like literally higher than even Vanguard, and they had so many assets when people were excited about them, but then now they've gone down when it comes to assets under management. I think one reason is, whilst there's nothing wrong with these companies, a lot of people are starting to realize some of the drawbacks as well. So for example, in March, when everyone was panicking, or at least a lot of people were panicking about stock markets, statistically speaking, people who invested through advisors were less likely to panic sell, whereas people in robo-advisory firms and DIY platforms that, especially if they had no exit charges, they were more likely to actually sell. So that's another great example of a double-edged sword. So for example, a lot of these robo-advisory firms literally have zero exit penalties. But the ironic thing is that actually led to more losses, because what was happening is, in the same way as 2008, a lot of people thought, no exit penalties, so I'll just take the money out because markets might go down further. Whereas anyone who's read the investing evidence knows that you should buy and hold. So a lot of the things about these robo advisory firms are double-edged swords. They can be positives or negatives depending on how you use them. But what I've noticed is a lot of people will say things like, I wouldn't be like that. I wouldn't be that person who, like in 2008, panic sold if that happened again. But I was speaking to a few of my friends who said that, and then suddenly in 2020, they panic sold. So it's a bit like saying I'll go to the gym every day or something like that. Saying you're not going to panic sell is very easier said than done. And that is also where the role of an advisor can very much be beyond technical knowledge, and also emotional support as well.